From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 28th, 2015. I hope you had a great weekend. As we start this week's trade analysis, keep in mind the market is still in holiday mode. There is a lack of significant news or data this week, and many countries are still observing bank holidays as we go towards New Year's Day. I'm going to do an overview of each of the U.S. pairs, but I still stress caution in trading in this week's unpredictable trading environment. Let's get started here with the USDCHF, the US dollar versus the Swiss Franc over the past several months. Let's go back a little ways into October. We can see the beginnings of an uptrend. We see down here where the red circle is, bottom of the blue trend line, took a little bit of a rise higher, not a little bit, a pretty substantial rise higher from the 9400s all the way up into the 1.0300s. Then it made a little bit of a pullback over the past several weeks, a pullback down towards the 100 period simple moving average. And you can see it coming down here to the green zone just above the 9800 level. And that's where we've been sitting for the past couple of weeks, just above 9800. We've seen it repel off of there, back up towards 1.0, back down towards the mid 9800s, and that's where we sit right now at the bottom of this black box, just above the 100 period moving average, 9800, and that green shaded area that we see. We have stayed above the last low. That's very interesting for this week's trading. The last low sitting here just at the 9800 level, and this week so far we have stayed above that. That'll be an interesting aspect to this week's trading. If it can't break through that low, we might see the market turn around. Only if it breaks through that last low in 9800 do we look for the continuation lower. Let's go ahead and zoom it in here a little bit on the daily. We put this black box there last week, observing the supports down around that 9800 level, the 100 period moving average, 618 by the way, of the previous uptrend sits there at 9800 as well. So this week we would expect support there, just above 9800. Looking for support there, and only if it breaks underneath there do we look for it to continue the downward trend and the pressure lower here for the US franc. Now today, and over the past several days, let me zoom in one more time. You can see this blue shaded area holding as resistance. That's 99.00 to 99.20 sitting as resistance. We saw an attempt to get above it here, short-lived, and back underneath it. So that's your current resistance here for the US franc, sitting around that blue zone, 99.00 to 99.20. And only if it opens and closes and breaks out above there do we look for the continuation higher, likely back towards parity in the 1.0 level. So that's really the way you're going to look at this currency pair today, or really this week. As long as it's congested and consolidating around the blue zone, we might look for it to dip towards 9800, but expecting support there. A break towards 99, resistance, but a push above there, we might look for the continuation of the rise. 4-hour time frame's not going to change it at all. We just get a little bit of a more detailed view of that same instance. We have seen on the 4-hour it above and below the blue shaded area, so be very cautious there, and assuming that's a breakout. Back above the blue zone, I would expect some upward pressure. Underneath it, we could see it continue to pressure back down towards 9800 this week. Next, moving on over to the EUR USD, Euro versus US dollar, very similar situation here on the Euro dollar, where we see the previous downtrend, the rise, just opposite of the franc. The rise here, we've been stuck inside this black box for several days now. Zooming in a couple of times now, you can see that black box, support at the green zone down towards the 1.0800s, 0800 being the bottom of that green zone. The blue shaded area at the very top, 1.0990s to 1.1000, so 1.1. That's the blue shaded area up there. Currently, of course, that is your resistance. You can see that right now over the past several days, finding resistance. 100 period exponential moving average, by the way, sitting there just into that same zone, 50% retracement level of the previous downtrend. So we can see the similarities between the euro and the franc. As long as it's underneath there, I expect resistance. A breakout above the blue zone, 1.1, we likely look for the continuation higher. We have that same similar hinge point here. We have support seen into the orange zone. Anything underneath it, we look for it to begin working its way down. So look at that orange shaded area, somewhat of a hinge point. Above it, we begin working our way back up towards the blue zone, which is what we're doing now. Back below it, we possibly take a turn back down towards the yellow zone, down into the 1.0800s here for the euro dollar. Next, let's take it down to the 4-hour time frame. And we'll go ahead and zoom it out a couple of times. So there's that same black box, maybe not that much. There's that same black box. We can see, of course, the resistance at the blue shaded area, 1.0990s up to the 1.1 level, the blue shaded area at the top. Again, 50% of the previous downtrend sits inside there at 1.1 area, the blue zone. The orange shaded area holding as a little congestion over the past several days, now going to be your support. I wouldn't want to sell it on top of the orange zone because there's support. I wouldn't want to buy it under the blue zone because there's resistance. So at least at this point, you're either buying the orange zone, targeting the blue zone, selling the blue zone, targeting the orange zone, and at some point over the next several days, we'll watch for a breakout. I don't know if we'll have enough momentum this week to do that, but definitely watching for a breakout either above the blue zone to go higher, below the orange zone to begin the downfall here for the euro dollar over the next several days. Moving on over to the GBP USD, Great British Pound versus the US dollar. Of course, long term, this pair has been in a downtrend. We can see that pretty easily here on the daily time frame along the red and the black trend lines. We have touched down here towards the bottom of that downtrend channel. You can see down towards the 1.4800 level, the purple shaded area at the bottom, holding as our current support in the downtrend channel. Not too surprising that we've seen a bounce off of there. That's been the pattern of the trend. How much that will bounce off will, of course, be up to the market. Will it continue to pressure back up to the red line or begin to turn down in the direction of downtrend and make a new low? We'll have to wait and see how that goes for the next couple of days, going probably into the new year. Zooming in a couple of times, you can see that orange shaded area. Very interesting here for the pound dollar. You can see a couple of days settled out inside this little black box right here inside the orange zone. That's where we are right now. Again, between 48.95 and 49.30, that is the orange shaded area. And we can see that really what we need now is a breakout above the orange zone to go higher, or back below the orange zone to begin working our way back lower again. So that's really what we're going to look for today, a breakout of that orange shaded area. Take it down to the 4-hour time frame. Again, zoom it out, you can really get a good handle on that orange zone and the congestion that we're seeing inside there. Again, that's 49.30 at the top and 48.95. You can maybe even call that 1.4900 at the very bottom. But look at the congestion back here. We're in that same zone. If you're going to trade in between there and just trade the congestion, selling at 49.30 or buying at 48.95 might be an opportunity, but I think the best opportunity for this pair will be the breakout of this orange shaded area sometime this week or maybe even going into next week for the pound dollar. Taking a move on over to the US CAD. Of course, this currency pair has been in an uptrend. We've been studying that for a long time here in the trade analysis in the live trade room. The pattern has been, of course, a rise, congestion, rise, congestion, rise, congestion over the past several weeks. Now, this week we see a little bit of a dip. We see the dip back down into the 1.3800 level. Haven't seen that kind of a dip in quite a long time. Since back down here with this black box, this is really where we saw a significant dip or any congestion that was more than just a little bit of a hesitation. You see that down here with the black boxes. So definitely a different part of the pattern. But I still think this is an uptrend and definitely the direction to focus your efforts in. Let's zoom it in a couple of times here. You obviously can see the orange shaded area holding as our support. So above the orange zone this week, we still have the upside expectation here for this currency pair, targeting back to the resistance highs, which are into the green zone in the mid 1.3900s. If it ever breaks above the green zone, of course, we look for the continuation of the uptrend pattern. And really, the next thing to look for at the downside would be the breakout underneath the orange zone. We look for a continuation lower and retracement of the long-term uptrend here for the US CAD. So for today, I still think above the orange zone, you have the upside expectation down to the 4-hour time frame. And you can see so far the market late last week, of course, just went into stagnant market. We saw a little bit of a spike lower with the market open this week and now moving back up. So definitely expecting some upside this week, at least early part of this week, targeting back towards at least 39, 39.15 and the green shaded area here for the US CAD. Any break above the green zone continues higher. Bounce off of there could produce some resistance and possible reversal once again for the US CAD. Next, moving on over to the USD JPY, US dollar versus the Japanese yen. We do expect that there could be a continuation of the downtrend pattern here. There's nothing really indicating that we're going to see a reversal. Over the past couple of weeks, several weeks actually, it has been very volatile for this pair. You see the three trend lines I have. The first two red trend lines, the fall, the rise, and then the blue trend line, the current downtrend we see for this currency pair. No real Reason to believe it'll turn around and go back higher right now. No evidence of reversal to go back up, but definitely something to watch for given the pattern we've seen over the past several weeks. But continuation of the downside, the momentum is clearly an opportunity here for this currency pair. One more time, let's zoom it out. You can see the long-term black trend line, still some a ways to go back down here into the 118s if we're going to see a continuation of the fall. Zoom it in a couple of times, you can see the previous uptrend, 618 fib sits right here at 120.25, right at the bottom of our current support, the orange or yellow gold shaded area, whatever color that looks like to you. That is your support above that 618 fib, again, of the previous long-term leg of the uptrend over here on the left-hand side of the chart. Anything underneath there might, again, even see it all the way back down here towards the green zone at the very bottom of the chart. See if I can get that moved over there for you. This green zone down here at the bottom, you can see the last support low over here on the left-hand side. Does become a pretty decent and handsome target on down for the US yen. Otherwise, reversal here, we're back to the pink zone, 121.25 to 121.50. That becomes your next resistance level. Again, if you're going to sell a pair, sell any currency pair, to me, it always becomes an opportunity to do it in one of two places. Either back into resistance, which at this point is all the way up here at the pink zone, or a break underneath support, which of course is underneath the yellow shaded area. And it's not doing either of those quite yet. 4-hour time frame, of course, we can see that over the past couple of weeks, it's just been kind of a slow creep down here towards the yellow zone. I do think as long as it's inside the yellow zone, there is still a little bit of a downside bias, a break underneath there. We look for it to go lower, back above the yellow zone and the 120.60 level. I think may give us a clue to some reversal once again, like what we saw over here on the left-hand side, back to the pink zone for the US yen. Taking it on over to the AUD/USD, long-term downtrend. This is the weekly time frame, by the way. Long-term downtrend, consolidation triangle down here at the bottom right-hand corner of that downtrend. That's important information as we go down to the daily time frame. So we can see that's the same thing. Red triangle pattern, rise, fall, the blue trend lines, rise, fall, the green trend line. So now we're in the rise phase once again. So the closer it gets towards 7,300, 7,320 becomes potential resistance based on the pattern that we've seen over the past several weeks. A contraction or consolidation pattern, we would expect into 73, 73.20 to be our resistance based on the historical pattern. 4-hour time frame, let's just take Fibonacci from the last high we see up here at the top of the chart down to the current low. That puts the 618 fib right at 72.75. Guess what? That's where our current resistance is right now at the gold shaded area. Next resistance, 786, all the way up here at the red trend line and the purple shaded area. So you see current resistance at the gold zone, next resistance at the purple zone. Given the pattern, the red triangle pattern, I wouldn't be surprised to see it up here into the mid 7,300s for our next resistance. So a breakout today above, in this week, above 72.75 or so. Look for it to head back up 25, 30, 35 pips as it takes a turn back up towards the purple zone. If it doesn't and turns back underneath the yellow zone, back underneath 72.45, we could be heading right back down towards the bottom of our triangle pattern and at least down here towards the orange shaded area. So watch the continuation, the contraction or consolidation pattern here for the Australian dollar this week. Purple zone would be very interesting for a selling opportunity if it can make it back up there for the Australian dollar. And lastly, moving on over to the NZD/USD, we're looking here at the weekly time frame again. We've studied this over the past several weeks. Red trend line, important as we look at today's analysis. Take a look at that red trend line, long-term trend. Fundamentally, we've spoken about the fact that this should be going down basically because of cuts of interest rates in New Zealand, raises of interest rates in the U.S. Fundamentally, this is expected to be a downtrend, but over the past several weeks, we've seen the market continue to rise towards this long-term weekly trend line. Daily time frame, there's what we mean by that. The green trend line showing you the rise and the continued challenges back into the highs in that red trend line. I wouldn't consider this a breakout until we see a clear single candle body above 68.25 or so, because obviously back here where the red circle is, it found resistance and reversed again. So not really a breakout expected today. Let me zoom in one more time because it's not an open and close. In fact, if today gets back within or under that blue shaded area, it becomes a false breakout once again. However, if over the next couple of days we actually see an open and close above the blue shaded area, that gives us a clue that we may be looking for some further push higher back up here towards the green shaded area and the resistance highs that we saw over here on the far left hand side of the chart. So staying above 68.25 has the potential to see it continue back up towards 68.85, 6900, but not a guarantee until we see an open and close. Never a guarantee, but not higher probability until we see an open and close above that blue zone. Take it down to the 4-hour time frame. We have, by the way, on the 4-hour time frame, seen open and closes on the 4-hour above 68.25, but be cautious in assuming that this is a breakout. Of course, holiday mode, holiday week, you got to expect there's some potential false breakouts and false moves when the market moves like this. So be cautious in assuming this is a breakout. Back inside the blue zone by the end of the day today could be the clue that we need for this to continue to turn around and go back down again for the New Zealand dollar. Staying above it on the daily time frame, I think, will be the clue that we need for the continuation higher. But again, fundamentally, it makes much more sense for this to turn around and go back down. We just haven't seen any evidence of reversal yet for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.